Greetings, members one and all of the Salivation Nation. The flow of gold. Most of us, when we think of that, we think about molten gold pouring into a mold. And we're talking about the flow of gold through the Comex in this video, and this is an example of a bar that you may see in the Comex and other storage facilities, and it looks like things are really happening at the Comex, so let's explore! Indeed, gold flowing through the Comex. It is exploding with deliveries, according to some research done by Shift Gold here. And again, we must take it for a grain of salt, the information provided here, because, well, this is a bullion dealer, and this is a bullion dealer's interpretation of the gold delivery. And that volume has blasted higher. Now, I always take information wherever it comes from and understand that there may be some bias involved whenever you look at these data, but some of it is undeniable. The interpretation thereof is a different matter. And we're going to look at this. What is this telling us? And what we take from this information moving forward here. But there's a lot of charts and graphs and good research here provided about September gold. Has been a very strong delivery month, with 8,573 contracts being delivered, plus an additional 718 in open interest that will be delivered over the next week. So that's a total of 9,219. It's currently still below the July month, but could exceed the total by the time the month completes due to mid-month activity. There's a lot of moving parts, as we'll see as we go through this, so keep that in mind and understand again how this is interpreted. And really the same thing for silver too. And we're going to talk about silver here as well in this video, but the focal point here is gold, because that's, there's a lot of activity. So we see the mid-month activity has been a huge driver this month, especially recently. July has seen 6,590 such contracts, up from 3,556 only 2 days ago. It's a major move higher for this late in the contracts. I think that is kind of the news making status here today. We can see that line is what we're looking at here. Massive upswing that we've seen here, where usually in previous months we've seen it level out much earlier. From a dollar volume perspective, this September has smashed the old record from 2020, despite the gold price being almost $400 lower. So that's another big news here that we can see here from this chart very clearly and evidently. Now, this is notional deliveries, and, one could think, well, that's a typo. It should be national deliveries, but that's essentially where deliveries are kind of happening backwards in another trend line, or, this other move back into another direction. The house accounts, and particularly Bank of America, have been extremely quiet this month. If the current numbers hold, this will be the lowest net activity from house accounts. So in other words, there's deliveries backwards to the house account since November of 2021. And we can see the house account activity. So the recent stock report showed the physical movement of metal has been anything but quiet, and maybe deserve another video on that topic. Gold inventories continue to plummet at a rapid pace, with registered dropping by a whopping 5.1 million ounces since May 1st. We've talked about the dwindling supplies of the Comex of silver, and gold is starting to feel kind of the same. And we can see the stock change in this chart here, daily and cumulative change of stocks since that last report. And then we know that the next delivery month, in October, shows a slight elevation in open interest contracts relative to last year. October is an odd month, as it sits between August and September, or August and December. It's too large to be a minor month, but also much smaller than major months, if that makes sense. And we see that the 6 days ago, the current October is above last October by 11,000 contracts. In fact, going back to 2007, this October shows the second highest open interest behind only 2020. As we know, 2020 was a very unusual year, and so this contract will start to roll in the next few days, but it's looking promising as of now. So there's some speculation here of where things can go. And then we have the open interest countdown. The delivery strength in major months has held up quite well over the last year and a half. Last October was the weakest month over that time, with 18,625 contracts delivered. This October is definitely on pace to come in above that. Look at that. Pretty amazing. A lot of activity here for sure. If we look at that's the stored deliveries over the last, months here. And then we have the spreads. The gold market remains healthy. Contango with the December contract with full $10 above October contract. The Contango essentially means the future prices are trading higher than spot price. So gold difference between current and next similar month cost to roll. What could that mean for the future prices of gold? Well, people are predicting lower gold prices through the end of the year, but that may not be the case. We may see gold pop out a bit based off of these data and others. And while the futures market is in contango, the spot market has gone back into backwardation. And backwardation, shows that traders are valuing the spot price higher than the futures price. So that's kind of the push and pull. Contango, where the future prices are higher, and backwardation, where spot prices are valued higher. If it holds for the next week, this will be the third time this year that gold has entered backwardation for an extended period. Once the October contract rolls off, it will flip into contango. Then it becomes a waiting game to see if December will become the fourth major month in a row to end for backwardation. That will be interesting to see the difference between cash and futures largest volume contracts. You can see there's radical moves over here since March of 2022. Pretty crazy to see here. Spot versus future price. And now let's talk a little bit about silver. You've seen me do videos about the Comex stockpiles. And so this is kind of pulling some things together, even with gold and silver. It's still seeing relatively weak delivery volume when compared to the last 2 years. That being said, this month will be the biggest major delivery month since the Russian invasion of Ukraine. And there you can see. And so mid-month activity is a main reason for the recent strength. September is the second strongest major month since March of this year during the start of the invasion. And in silver cumulative net new contracts after first position, we can see this line here showing that radical departure from the other data there. And unlike gold, where the house accounts are very quiet, silver is seeing the biggest house activity ever. Bank of America House has backstopped the market this month, satisfying more than 75% of the delivery demand. And there you can see it. The Bank of America House. Look at that. Crazy. Ironically, despite the recent strength, this September is on pace to be the only fifth strongest September on record. So it's the fifth on record there. So we've been here before, according to these data here. And then we have the notional deliveries for silver. Silver continues to leave the Comex vaults at a torrid pace. Again, topic that I've covered for sure, and that is alarming in my view, as it's continued to happen month after month after month. So while delivery volume may be slow and price has been disappointing, both the house accounts and Comex vaults show that there's major activity happening under the surface. And that is a good takeaway here to see what's happening with silver. October silver is looking quite weak, with open interest and lowest levels for a minor contract for the months shown below. Look at that craziness here we can see. Last month finished quite weak, and it looks like that may happen again. So stay tuned. We'll see what happens here with silver, especially with the Comex deliveries. These are numbers we've not seen since 2016. And that was only for a brief amount of time. And typically things rebound, But, we have a lot of things that are different now than they were then in terms of supply chain is one thing we have to keep in mind, but also just the notion of the markets and where we are at on our delicate and fragile economic situation here. The spot market remains in backwardation when compared to October for silver. Aside from 2 days in August, the spot market has been in a consistent backwardation since July the 1st, and we can see that there. So wrapping all this up, gold is showing strength across all metrics except for bank house account activity. Strong delivery volume, strong mid-month activity, and large removal of physical gold from the vaults. While the paper price remains weak, the physical market is showing serious signs of strain. It's only a matter of time before the paper gold price starts to reflect the turmoil in the physical market. As inventories drain from the Comex, there will be less and less supply to support the futures market. In other words, we may see the derivatives market even explode even more. Eventually, a short is going to be caught with no metal to deliver. At that point, the price won't pop, it will explode. And that is their analysis, and that is their conclusion. I caution against that, even though I believe some of these data and some of these analysis can be seen as being an obvious, case and a sound, one could come to that conclusion, rightfully so, based off of the data that we just talked about and their research. However, inventories and stocks can refill even quicker than we think, and I want to caution you about that. But if things continue the way they are and have been, then yes, that will happen, I believe. There's no other conclusion to draw. The laws of supply and demand will come forth and spring about if this continues. Silver is a different beast. Most of the futures markets is showing depressed activity, while under the surface the inventory of registered metal has been absolutely plummeting, and that is true. Things may look calmer than the gold market, but the physical activity is actually even in greater turmoil. Look no further than the Bank of America having to backstop the market with its largest delivery out on record. The Fed may have successfully talked down the speculative future traders, but make no mistake, the smart money is gobbling up physical metal at a frantic pace. And there you can see here, that's interesting. And gobbling up physical metal is something that I think is a good idea for us, as we can afford to. Now, obviously, I'm not saying you should go out and sell your all of your other interest, your stocks, your IRA, like I did. I would not advise you to do that. But I would say that within your budget, it's a good idea to have, to hold, and yes, to even buy some physical silver and physical gold. Now, obviously, if you are already a stacker, you know this and you're doing this. And seasoned stackers know not to just go balls in, balls deep in with it, with your stacking your silver and gold. I believe it's good to be smart about how you accumulate as well, because we could see a depressed pricing for at least to the end of the year. Now, I don't believe that's going to happen. I think we're going to see times at least where the price will pop out. Because of some of what I've talked about in this video, by the way, we could see those prices pop out. Is some of that will affect the psychological renderings of the marketplace. Let me know what your thoughts are. Very interesting data. More to talk about this subject, and I will definitely be doing that in future videos. Let me know what your thoughts are. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate this video. That means to thumb it up for those of you in Real Linda. Share it across all social media platforms, comment, and subscribe.